The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day from TFNN. Welcome to the November 26th Magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And the easiest way to do that, I do mean the easiest way to do that, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, you can always send me an email. Let those fingers do the walking. Steve@TFNN.com. Just inside the subject heading, please put radio show question. And in that Tiger's Den, well, any ping will do. So let's go ahead and get this show started on magical, magnificent, marvelous Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow trading up 198 points. 24,484 is the print. That's 0.8% to the upside. The S&P up at 0.9%, 24 points. 2656 is what she's printing at. Nasdaq 100 up 1 3/10%. If Apple could get moving to the upside, it would be up even higher than that. Apple's down $1.18, trading down to 171. So it is mean and green across the board. Spot volatility index off $1.59, trading at 1993. That's not the important number. We'll take a look at the important number here in a bit. Gold is off 90 cents. Silver's down 4 pennies. Where we're going to start the day is with light sweet crude because one of our subscribers, one of our listeners wrote in. And so let's go take a look at his question. This is coming from Andy H. And Andy was just simply on his software, he drew a potential 3-drive to a bottom pattern in light sweet crude. Now, the current contract, by the way, that is being traded is the January contract. I didn't take the time to update my system here, this system, the white background system, the Ninja Trader system for that symbol. So I'm just showing you the continuous contract. Now, that's okay. It doesn't impact really what we're taking a look at. And so what Andy was doing was using the candle session of the low from November 13th as drive number 1, so to speak, number 2, November 20th, and then on November 23rd, drive number 3, or really could be today, because today is a lower low. So you'd really pretty much use that, we'd move that. So anyways, it's kind of a messy 3-drive to a bottom pattern from my perspective, Andy, but it doesn't mean that it's not one. It's just kind of, it's not beautiful looking. But regardless of its beauty or lack thereof, there still may be a bottom forming. So let's try to go check that out. How are we going to do? Oh, geez, I grabbed something and now there we go. Let me just get rid of that. So here's what I want you to do, because maybe you are bottom fishing, so to speak, for light sweet crude. And if a bottom has formed, what I believe is we would see some signals on the shorter term time frame first. So let's actually move over and take a look at the current contract, the January contract out here. And we've got a 240, so 30-minute, 240-minute, a daily, and a weekly. Actually, if we start right to left, we'll see from a weekly standpoint what there isn't out here, Andy, is any type of support from the standpoint of any TAS market profile. So we did not see a new market profile form over the weekend, last night, this morning. So we don't have any levels of support there. If you look at the weekly chart, again, it's a very right-hand panel. What you would say is, in looking at this based upon this real waterfall cascade, so to speak, to the downside, the light sweet crude on a weekly basis is headed back towards the June 19th area in the 47-ish range out here. We have the daily time frame chart. Maybe there's a 3 drive, maybe not. It's pretty. So let's not go there anymore. So let's spend time on the 30-minute and on the 240-minute. Here's the 30-minute time frame chart. So one of the, and you've got it on really both screens out here. Here, let's just come back to the E-signal charts. So one of the things, so it says that there's still more counter trend rally that should occur out here on a 30-minute basis. Now, the reason that Stevie says that is we can see these new market profiles here that have been forming on a 30-minute basis, and we can see that the one that most recently formed out here, this took place at 11 o'clock this morning, is bullish in structure. What does that actually mean? That's a great question. So let's go take a look at this chart, and let's turn price off. I know you're going to say, what do you mean turn price off? I need to know what price is doing. No, what you want to understand is what is the structure of this profile? And Stevie says it's bullish in nature. The reason is because the center line of this box, you're looking at the left-hand panel, 51.75. The bottom is 51.51. The top is 52.25. The center line, where both buyers and sellers are comfortable with price from this time frame, a 30-minute basis, is closer to the bottom of the box at 51.51, and therefore more buyers should be lined up between 51.51 and 51.75. So the question is, on a 30-minute basis, does support hold? Well, now that we go ahead, we turn price back on, we can see that price came down here just before we were coming on the air between 12:30 and 1. And tested that level, 51.51. Let's come over and take a look at this chart here, my Ninja Trader chart, and you will see it maybe a little bit easier visually. Price was also coming back and testing Stevie's red line that had turned green. When it turns green on a short term or any type of time frame, tells you that the price oscillator difference between two exponential moving averages is above 0. And what you typically see is at some point in time in the near future, you see a test of Stevie's red line. That's what actually took place at 12:30, Andy. So you have a test of Stevie's red line. You have a test of a market profile. And the key here is what will happen when price gets up to resistance, 52.25 out there. Price should get up there and test that. You shouldn't see a close below 51.51 if, in fact, this has made some type of at least short-term bottom. Now, we say short-term bottom because what price ought to do, if in fact it takes out that resistance level on a 30-minute time frame, price should eventually target Stevie's red line on the daily time frame, 54.13. Until price gets over that, there's no way that Stevie's going to call this a bottom. Of course, I have my own beliefs about light sweet crude, and that it's almost not tradable from a technical perspective because of the big hands that are in the pot out there. We're not going to get involved with the politics and everything behind it, but it is a bit odd not, you heard me say that, it is a bit odd not that light sweet crude has been going down ever since the whole Khashoggi incident began and took place out there. You don't think there's a quid pro quo? Well, maybe there isn't. But trying to trade this from a technical standpoint, I think is a bit difficult to do. Nonetheless, what light sweet crude should do next is go test 52.25 out there. So just be careful, like with everything that you're trading. Steve Rhodes with TFNN. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So let's just take a quick peek here. Again, let's spend a little time for each of you out there, Andy as well, in the 3 drive to a bottom pattern. So that first drive, we're just looking at it from a time sequence standpoint, would have been November 13th. The second drive then would have been on the trading session. When is this? November the 20th. And one of the things you don't like to do is really try to force these patterns. So a 3 drive is going to be symmetric. It's going to be symmetric from a look standpoint, both in time, maybe in Fibonacci expansions between swing point highs. In this case here, ideally, if there was a 3 drive to form, it would be November 28th. Today is November 26th out there, so you don't want to force it. Here's another example of a 3 drive pattern, Andy, and that is inside the NQ. Now, we know this because you and I have been taking a look at it, as well as other subscribers, and said, hey, there's a number of patterns that have formed inside of the NQ. This is the daily that we're looking at. So here, the first drive would be October the 11th. Then the next drive that would be out here would be on October 29th. And legitimately, that third drive should have taken place on November 14th. If we expand it just a touch, again, so the question is it a 3 drive to a pattern or not? Because the low didn't come in until November 20th. Well, it doesn't really have to be, because there's other patterns that were present. Here's what that drive to a pattern bottom would look like on the NQ. Here's the daily time frame, so you can kind of see that nice and colored in, but we can get rid of that. Because you see, there's other bottom signals that are out here. The Rhodes Momentum Indicator bottom signal, A to B equals CD patterns. Here's your A to B equals CD price projection inside of the NQ. So you can see that it made the 1-to-1. That projection error was 65.47. Yeah, it got down just slightly below that. but it completed at least 2 different patterns. Now, what's missing is some type of bullish reversal candle, and we don't have that today. We can't have that today, really, for the most part out here. And if we want to take a look at what price has done, want to understand a level to be paying attention to. We were talking about light sweet crude and where price could or should bounce to if it can clear that 52 and a quarter level. Remember, that's the next level of resistance on a 30-minute time frame. And where it should bounce to, if it can do that, if it can get over resistance, would be Stevie's red line on the daily time frame. If we take a look at what the NQ has done today, it's tested and rejected Stevie's red line. That is at 66.55. Actually got up just slightly higher than that, but watch that level, because if there's a close above that, then what that's going to signal to you is more counter trend rally when we take a look at the NQ. Now, what we can also do, because not everybody has the equity futures contracts, or most of you don't, so let's just do this. Let's go take a look at the NDX 100. Let's take a look at a couple of different things out here. This way I can go ahead and I can give you Stevie's red line number on the NDX. And that's 66.50 and a bit of change out there. So here what we can see is that resistance held thus far. So if price is able to close above that, what that tells us, just as it did back here in the time frame, let's take another example. Here's that price Rhodes momentum indicator bottom, October 29th, to get the bullish signal with a gap to the upside, a rising window. Price test gets above, closes above Stevie's red line. For a couple of days out there, there's a pullback into that level, but it acts as support. Then price moves higher into the November 7th level, 7 and 11. Sounds like a craps game to me. So in this case here, what you'll want to be watching is Stevie's red line, 66.50. Now, if we start looking underneath the covers of the NDX 100, and I know we're spending a lot of time here, or a little bit of time here, why? Because it's the NDX that's getting the snot kicked out of it, right? We know that. So we're looking for what has been the leader on the way down, the weak link on the way down, to see if it's got any kind of bottom signals. So it's interesting. Yes, you've got Apple and others, the big crowd that has really gotten the you-know-what kicked out of it. But if we look at the wider swath of the market breadth, all 109 issues inside of the NDX 100, the interesting thing is that right now, it's just about even, but it's not. There's actually 29 components inside the NASDAQ 100 that are trading above the top of their market profile. When we looked at the 30-minute chart for light sweet crude, we said if you get above that, that would be resistance that would be broken. Well, here we take a look at market breadth resistance. And so those issues that are traded above the top of their box are basically in a bullish mode. So we're just using this as a general statement out here. But these crossovers on a daily basis, they're important out here. And so right now there's 29 issues trading above the top. I said it was close. There's 26 issues trading below the bottom of their box. And it leaves 48 in between with regard to what's going on inside the NDX 100. But as of 1:23 in the afternoon, the NDX 100 has a bullish crossover daily time frame that you and I are looking at. So it's all going to be about how does the market close? What does this look like at 4 p.m.? I'm reporting to you what it looks like at 1:23 in the afternoon. That way, when other people are trashing the NDX out there, and there's many of them, including sellers, you can say, maybe there's something else to look at. So what else is there to look at? So we've got the A to B equals CD. We've got a Rhodes momentum indicator signal on the NQ. Maybe a 3 drive, maybe not. Doesn't really matter out here. What else do we have? We've got a possible crossover, bullish crossover with regard to market breadth out there. All right, so what else do we have? Well, we've got divergent patterns, both inside the S&P and the NASDAQ 100. What do I mean by that? Well, if you take a look at the right-hand panel, well, first take a look. There's 4 different charts that you're looking at here. On the left side is RSP. That is the S&P 500 equal-weighted ETF. That means all 500 components, there's probably more than 500 components, have an equal weighting. Apple doesn't have any more weighting than anybody else. Down below, you've got the SPY. There you've got the weighted version. On the right-hand side, in the other ring, we've got QQEW, the equal weight for the NDX 100. Every component. Doesn't matter whether you're Microsoft, whether you're Facebook, whether you're Google, whether you're Apple, whoever you are, you get an equal weighting. You get an equal vote out here to tell us, tell you, tell me whether or not there's any meaning behind the move out here. Bottom panel, is the weighted version, the QQQs. Now, what typically happens, the way that you can use this set of tools out here, is you look for divergent patterns. What the heck does Stevie mean? Well, in the case of the SPY, it was making a lower low. You can see the red angle out here. In the case of the RSP, it was making higher lows. Now, I'm referring to just a couple of dates. I'm referring to going back to November 20th to November 23rd out there. Then while everybody was getting ready to eat, which we all did a lot of, drink, which some of us did a little bit more than others, and just basically have some fun, which means watch a ton of football out there. Oh, and how about that golf on, when was it? That was Friday, yeah, the golf on Friday. But let's get back to the charts out here. You can see the divergence. When you see these divergences, it is the equal weight that is typically pointing the direction of what is going to happen. So now we put together these patterns inside the NQ. We put together the market breadth. Oh, well, let's come take a look at the Qs out here. The Qs were making a double bottom, so to speak. The low out here in the QQQ was based on the closing base, was basically on November 20th, basically the same close as November 23rd. But what was going on the equal weighted version of this? Yeah, you had a higher bottom. So here's the key. Just come back. Just simply pay attention to the NDX 100. Where does it close today? If it closes above Stevie's red line, 66.50, there is more counter trend move underway, or possibly a bottom. It's just that simple. Look, Rick. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up about 2.25. Talk about getting the snot kicked out of themselves. Go blue. Man, that was a great game if you were a Buckeye. It was not a great game if you were a Wolverine out there. In any event, the request out here was to take a look at the January contract for soybeans out here. And if we take a look at the soybean futures contract for January, Ruby, here's what we're going to see. If I begin focusing, I should say, on the weekly time frame chart, prices trading below 876. Which is the top of its weekly profile, and it's below the center at 866. So what this tells me, it's headed lower to about the 836 level. If we look at the daily time frame, there is an orange bar today. It is possible that you will get a new set of profiles tomorrow. So just knock on my door and ask me to take a look at it for you tomorrow. We'll see if it's because it may not form a new profile. Right now, let's go with the profile that's in place that says 848 is where it's headed to, 848 to 853, which is the bottom or the center of its bullish structured box out there. The 240-minute or the 30-minute time frame, even I've changed this to a 60-minute, is not really providing me with too much out here. So that's what I see when I take a look at soybeans out there. So I hope that assists you with your trade. No other questions that I see at the moment out here. So let's continue just simply to surf around. What else is it that we need to focus on, pay attention to, take a look at, so on and so forth out here? Well, I did mention the spot fix index was trading around the 1970 area, down about 8.5%. And that seems to be about as good as any place for us to go focus on. So let's go do that. Let's go do that by taking a look and combining it. Whoops, that wasn't a chart. Combining it with what's going on inside the New York Stock Exchange. And in the New York Stock Exchange, so by the way, the bottom panel here is the spot volatility index. And what we can see, or what I can report to you, is that the 50-day exponential moving average currently is priced at 1852. The spot volatility is trading at 1967. As long as price trades above the 50-day, things can just remain very volatile. What does Stevie mean by that? I mean, you can see huge swings in the market. Those swings would typically be to the downside. So you've got to be careful at this stage. Watch 1852. A close below that, then things ought to settle down. But until that takes place, we're in a real trader's marketplace with swings to the upside and to the downside out there. Of course, you don't need me to tell you about that. What we also do have, though, what's interesting is we have our second divergence. You and I were looking at a divergence inside the equal weight and the regular weight for the NDX 100 and for the S&P. Well, there's a divergence that showed up inside the New York Stock Exchange while most people weren't paying attention to the charts on Friday. On Friday, on a closing basis, the New York Stock Exchange made a lower low. But what it was doing with regard to its advanced decline oscillator reading, it was not doing the same thing. And those types of divergences typically set up bottoms in the market. You can see some red angular lines on my screen in panel number 1, and you'll see the same ones in the opposite direction, panel 2 being the advanced decline oscillator reading. Now, right now today, that reading as of 1:33 in the afternoon is above zero. It's reading at 9.93 on my screen. It'll change pretty quickly. Now it's 10.08. So it's measuring, to the second, advancing issues versus declining issues, doing the math on that. The math, by the way, is looking at the exponential moving average differences of the 19 and 39 period out here. So in this case, what we see is that when that advanced decline oscillator reading is above zero, the message is that it's bullish, or that buyers are the ones, like a football game, that buyers are the ones that are in control. So that's what you pay attention to. Now, it's an end-of-day reading. 134 doesn't mean a hill of beans. Although it means a hill of beans, it's just you can't go to the bank and cash it in. So what else is it that you're going to be watching inside the New York Stock Exchange? Excellent question. If I were you, I would also be watching Stevie's red line. And you can see right now we are trading right on it. Johnny on the spot, whatever that means, 12,148. The reason we know that is because if we take a look on the very right-hand side, you'll see that the red line, you would see a red number there, or a red box, and now you just see them. So the black box is covering the red box, and we're equal. It's 12,148 and a bit of change out there. So if price is able to close above Stevie's red line, if the advanced decline oscillator reading is able to close above the 0 level out there, the only thing that would be needed for a nice counter trend rally, and when I say nice counter trend rally, we're talking about the New York Stock Exchange getting back either to the high from November 16th around 12.435, or more likely, but not guaranteed, the highs of November 7th out there. Just a nice, full-blown consolidation pattern that is going on. What's going to take you back to those levels? Well, what will take you back to those levels is just simply a good old tune. What? No, what will take you back to those levels would be a close below the 50-day exponential moving average of the spot volatility index. Right now, 1966. 1852 is the number you'd be looking for. Does it have to do it by day's end? No, it does not. But here's how you can etch a sketch, so to speak, and put it all together. You know what to be looking at, or for a close inside the New York Stock Exchange. You know right now that its advanced decline line is just above 0. So a close at this level or higher, likely that would give you a signal that there is back in the hands of the buyers. We'll just simply call them bulls from a directional standpoint, bears from a directional standpoint out there. What happens if price closes below that level? Well, then you're not out of the woods. New York Stock Exchange, if you're going to use that for the signal, no way near out of the woods. And would just be saying truly just a counter trend rally. That assumes that it closes back below 0, the advanced decline oscillator line, and it closes below Stevie's red line. Then it would just say, hey, all that today was thus far was a counter trend rally. And you don't have to, but you should view it like that, especially with the spot volatility index trading where it is. Whew, I hope that helps you out. All right, so let's go check, see if there's any other questions out here. If not, we'll try to figure out what to go look for, or just simply in the den, just to put me on a direction here. Just type in something that we should go look at, and we'll be happy to do that. Okay, no questions coming from outside the universe. So what are we going to look at next? What are we going to look at next that's going to make a whole lot of sense? Well, I guess what I can do is give you the number on the S&P 500. Hey, trading up 27 points, 2660. To some, they might say, man, that sounds just wonderful. Except for the fact that all price has done so far is test Stevie's red line. How does this work? I don't know. It just works. By the way, that red line number is 2670. And a bit of change out there. So you'd be looking at a close above to give you a full-out bullish signal, or nothing more than a counter trend rally at this stage here. So what are the important components that we've taken a look at? Stevie's red line for sure, spot volatility index for sure, and anything else that we looked at too. We do have a question. I like it. We do have a question that came in, and the question was, can we go take a look at junk? JNK is the ticker symbol, so we most certainly can. I like to collect junk. That's the high yield income bond fund out here. Now, in this case, let me change to a different screen. Where is it? Right there, so that I can go ahead and pull it up. Now, thank you for asking about this. We're going to go strategically into a break. I'll pull up a couple of charts. We'll go take a look at JNK. That's the Bloomberg Barclays High Yield Bond Income Fund, which is really important to the direction of the market. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So in the prior segment, we were looking, in essence, at some correlations. We were looking for divergent patterns out there to assist us in understanding what the message of the markets is, on Monday, November 26th at about 1:30, 1:40 in the afternoon. So there was a request by Mr. Z in the den to go take a look at a couple of different instruments, one of those being the high-yield income bond fund, one of them. There's many out there. Specifically was JNK was one to take a look at. We could take a look at HYG. That's another one. But the first screen that we're going to take a look at is we're going to compare the S&P 500. That's the top panel. The next panel is the high-yield income bond fund out here. And then down below is a directional correlation tool. So what it does, it looks at the average over the past 5 days. That's about the shortest time frame that I would use on this. Typically, people would use 10 or 20 time day periods just to get a feel for the correlation. But we're going to use a 5-day. And in the case of the 5-day, when the bars are above zero, what it does, it's telling you that on average, there's a directional correlation, moving higher or moving lower out there. And you can see here that there's a very high correlation between these two. What does it mean? Well, it's similar, the way that Stevie interprets this. Others can interpret it however they want to. The way that Stevie interprets this is also a liquidity gauge as to what's going on in the market. The S&P, this is not rocket science out here. It's going to benefit and move higher when there's plenty of liquidity. So you have two liquidity gauges that you can use. There's more, but you have two at least that you can use. You can use these high-yield bond funds, HYG, JNK. Maybe there's a couple others that Mr. Z's put inside the den as well. And you can say, look, are those moving higher or are they moving lower? If they're moving higher, tells you there's plenty of liquidity. If the spot volatility index is below its 50-day, tells you that there is plenty of liquidity out there. That's how you can use them. That's the reason why when the spot volatility index is above 50 days out there, you can see these huge swings. In that case, swings to the downside. Now, getting back to the ranch out here, let's take a look at junk. Let's take a look at Jean-Claude Juncker out here. And if we take a look at junk, what we're going to also see, just like we looked at inside the S&P 500, so you can even understand the correlation between these instruments, where did price stop today? At Stevie's red line. That price is 34.57. So if you want to add another number to be taken a look at to help you understand what the message of the markets is come the end of the day, put down 34.57 inside of JNK. If price closes above that, then for this instrument, it would say, okay, it has more of a rally to go. To go where? Well, that price point would be probably 34.97 would be Stevie's next spot that he would be looking at out here inside of JNK. What if it doesn't? Again, you just kind of put all these things. If it doesn't, then it's just saying at this stage here, even though you've got the Dow up 230 and the S&P up whatever it is, all you can really, you can say whatever you want. I would say all you can really say is thus far a counter trend rally. Bottom in the making? Yeah, sure, maybe. But it doesn't have all the makings of a beautiful meal out there. They could add some ingredients tomorrow that would make it, but this is what you're looking for today. So when I take a look at the junk, JNK, all it's done thus far is run up into resistance, just like the NQ, just like the NASDAQ 100, just like the S&P 500, just quite frankly like the New York Stock Exchange out there. So that's what Stevie sees when he takes a look at JNK. You had a couple of other symbols out there. Those were, and here's the HYG as an example. So if you take a look at this, where did price run into resistance? 83.09. Stevie's red line out there, so that would be something to be watching. You know, another one. These other instruments, what did you ask for? Let's see, we'll take a look at one more since we don't have any other questions out there. LQD is the ticker symbol. So LQ, let's come over here to the 3 time frames for LQD, just for blanks and giggles. LQD, and this way we can just take a look at market profile. So this is the investment grade corporate bonds. Okay, so if we're taking a look at investment grade corporate bonds, that makes sense. We're looking for what's the message here. Well, so far today and the last trading session on Friday, price was trying to get over a bullish structured box out here. It didn't. It closed back below it. So where is that profile level? That is 111.75. We're trading right now at 111.69. You mean to tell me that 6 pennies makes a difference? Yeah, it does. Actually, the top of the profile, you look at this chart out here. Now, I'm only going back into September, but how often have you seen a close above the top of a market profile? You haven't. And so what have we seen with regard to the iShares investment grade corporate bond ETF? We have seen a steady flow of continued lower lows out here. So is it important for 111.75 to see a close above that, since we haven't seen a close above the top of the box in quite some time, which is resistance? The answer, my friend, is right there on Stevie's screen. It's absolutely, positively yes. So if you're looking for another signal for the market out here, watch 111.75 and ticker symbol LQD. I hope that helps you out. Thanks so much for asking and pointing me in a direction out here. We've got about 3 minutes left. I don't see any other questions. So what are we going to go look at? Let's go look at Apple. Oh, I take that back. Hold on. No, that's not a question. Not a question. It doesn't appear to be a question. Let's take a look at Apple. What the Sam heck is Apple doing? Anybody know? Yeah. Oh, yeah, sure. Somebody say it's going lower. Maybe. So here's another piece of the puzzle. Or perhaps, maybe it's just simply something to think about. Well, what do you mean, Jelly Bean? Well, here's what I mean. Friday, while some of you were out having a good time, hopefully everybody was out having a good time, what the market was doing was generating signals for you. And the signal that it was generated on Friday was a Tom DeMark setup 9 count. Now, that setup is taking a look at each day's session and then comparing the close of that day to the session 4 bars prior. And when you do that and you get 9 consecutive closes, in this case here, below the close of the bar 4 bars previously, you get a digit. 1, 2, 3, 4, 5, 6, 7, 8, 9. Now, in the case of Apple, is it a coincidence that Friday was a 9 count? What do you mean, coincidence of what? Well, when Apple actually made its high out here, there was a 9 count on October 4th. Yes, there was a higher high on the trading session October 3rd. But what Tom DeMark discovered back in the 70s when he created this setup pattern was basically one of 3 things that you would see. One of those things would be a change in trend. And the change in trend would take place the day before the 9 count, the day of the 9 count, or the day after the 9 count. And when Apple topped, in essence, started moving below Stevie's red line, it was green back then, took place after the 9 count, which was the day after the high. So the interesting thing here is today is the day after the low. Or is it? Because Friday was a Tom DeMark 9 count. Now look, they don't always work. There is no tool out there that always works out there. Paul Tudor Jones said the great thing, which is really who Tom DeMark had developed. Well, he was developing it for himself, but he was working for Tudor Jones out there. And what he loved about it was when this pattern failed, it failed miserably, which just means there was a strong trend in place. At the high, Apple generated a Tom DeMark setup 9 count. At the low, that's what we have in place right now today. Got to watch Stevie's red line, 183.10, if it is a bottom. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Dow's up 265, S&P's up 31. So let's do the 2-minute wrap here. What it is we're going to focus on for the rest of the day, really the market close. So this chart here is showing you the 4 equity futures contracts as well as the major cash indices. You've got the S&P, the Dow, the NASDAQ 100, the Russell 2000, the semis, the transports, the NASDAQ Composite, the New York Stock Exchange, the Wilshire 5000. You've got the XAU, and then you've got the New York Stock Exchange, the top 100 international stocks, and the top 100 U.S.-based stocks out there. That's a mouthful. Well, if you take a look at Stevie's red line numbers, from a daily standpoint, they're really in columns 1, 2, 3, 4, and 5 out here. And what we can see is that when a number is in the support level, tells us that price is above that area. How do we know that? Well, we can just look over at the last price. That'll typically do it for you. So you can see that the Russell 2000 is above Stevie's red line. So too is the Russell 2000 cash indice. That's at 1485.99. We're at 1500.30. The semis are above it. The composite is above it. NASDAQ composite. The transports, did I say that? The transports, the trannies, the New York Stock Exchange is above it, although just barely, 3 points right now. Wilshire 5000 is above it. The XAU is above it. New York Stock Exchange International 100 is above it. What does it mean when it is above it? Well, it's typically resistance. All resistance could be support. It would be one of the signals to let you know that what we have seen out here may be, in fact, a possible bottom, because price wouldn't close above it if it wasn't. So you're going to want to watch those end-of-day readings. Inside the S&P 500, the number right now, 2671. The Dow Jones itself, 24,833, and the NDX is 6652. So there you've got all those numbers. The only other thing that you're really going to go ahead and pay attention to, I suppose, will certainly be the spot volatility index. I don't imagine it'll get down there today, but if it does close lower than where we're at, maybe below 1943 or something like that, we should have a one-day rate of change greater than a minus 10%. That's typically an initiation move to higher prices out there. So, folks, I hope this has helped you out. It's been great to be back with you. Although I think we ought to just work 4-day weeks, period. I'm talking you and me and everybody else out there. Stay tuned. Your favorite polar bear is up next. I'll do a spot with Tom this afternoon at about 3:15 and be back with you tomorrow on Tuesday. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.